All right. So what is payroll? Dictionary.com defines payroll as a list of the company's employees and the amount of money they are to be paid, the total amount of wages and salaries paid by a company to its employees, the actual money on hand for distribution, and the total number of people employed by a business firm or organization. All right. So the breakdown of payroll, it's who's on payroll? What's the total number of people who are employed? Is everyone that the company pays an employee, or are some independent contractors? How can you tell? So it really breaks down to three key points of you have an employee if the employer has behavior control, financial control, and there are written employment contracts and employee type benefits, possibly. You've got a contractor if the contractor has the right to direct the work or say that they are not going to get it done. They maintain the instructions, they're responsible for their own training. They make the financial decision related to the job. Like, they send the invoice to say how they get paid, and they will let the business owner who is paying them know if the expenses are to be reimbursed to them through the invoice, or that they're going to supply their own tools that they need to perform the job. If you've got an employee, if the employer, the business owner, is determining who gets paid, what they get paid, if they get reimbursed, how much they get reimbursed, and if they provide the tools needed to perform the work. And the relationship to the parties, you're either going to have a employment contract for an employee, or you're going to have an independent contractor agreement for an independent contractor. That's a really quick overview. There is definitely a lot more in-depth information out there in other courses that I have. So, employee onboarding is really important that you capture all of the correct information at the time that you hire an employee. All the employee onboarding documents should be collected prior to the employee's first day, and definitely before they begin work on their first day. So you need a federal W-4, which is a employee's federal withholding certificate. The employee completes this and gives it to the employer. A lot of times employees will ask the employer how to complete this, and it is really kind of a tightrope that employers have to walk, because they can't say, "Oh, put this, put this, put this." All you can say is, "If you do this, this will happen." Like, if you say that you're married filing separately, it's going to withhold at the single rate, but you can't tell somebody what they should pick, because that is usually the information that the tax planner will give them. A state W-4 equivalent is applicable in 34 different states, and it's just, in general, it's an employee state withholding certificate. A lot of states will call it something different. It's not needed in the states that don't have income tax withholdings. There are some states that follow the federal withholding certificate, so it's not needed in those states. But there's 34 different states that require a state W-4 equivalent to be completed. An I-9 is put out by U.S. Citizenship and Immigration Services, and it's used to verify eligibility to work in the U.S., both for citizens and non-citizens. And there are verifications that need to be provided along with the I-9. And the document list is either there's a bunch of things listed in section A or B and C. They need, if somebody provides a passport, that falls into document list A. But if somebody only has a state issued ID, they also need to provide something that is listed in that falls into list B. They'll need to provide something listed in it for list C. So usually most common is Social Security card and state issued ID. And again, the employer cannot tell you the employer cannot tell the employee what documents they need to provide. They can simply provide the sheet that has list A and list B and C, and the employee has to choose what documents they're going to provide. And if the employer offers direct deposit, the direct deposit authorization form needs to also be completed as part of the employee onboarding. It is something that can be provided to the employer at a later date, but that just means that even if the employer offers direct deposit and the direct deposit authorization isn't turned in, the employee will receive paper checks until that direct deposit authorization is filled in. And a little known piece of the direct deposit authorization is it not only authorizes the employee's net pay to be deposited into their bank account, it actually authorizes the net pay to be withdrawn from their bank account in the event that there's a double payment or there's a glitch or something. It most direct deposit authorizations are not a one-way path. They're a two-way path.